This might be someone's perfect retirement.
This is not my retirement.
But Rick's looks more like this. It's not just any retirement, it's yours. Make it real with lifetime income from Prudential.
All right, to talk to us more about life insurance and his article, Why Life Insurance Matters on the Retirement Climb, it is my honor and pleasure to get to introduce from Prudential, Mr. Brett Berg, Vice President Advanced Planning at Prudential. Welcome to you, Brett.
Well, thank you, Chuck. It's great to be here.
You know, over the years, Brett, all the phone calls, all the meetings and client interactions you've had, there must be a favorite way that you use to describe life insurance.
Well, I like to describe it as a versatile financial tool within the context of holistic planning. So not only can it provide that benefit if somebody dies, right, the death benefit, we all know that, but it can also provide cash value, right? That cash value can be accessed to pay for family emergencies or supplement retirement income. So people don't really realize that it's that versatile a tool. And the first step is to obviously identify the client's goals and talk to the client and ask questions. But if somebody were to ask me what you would just ask, I would say it's a versatile financial tool that not everyone fully understands.
A lot of clients and really advisors, they want to make sure that there's a misconception that this might be a replacement or in place of a 401k or an IRA type plan. How do you help navigate the conversation so that it doesn't appear that it's replacing those tools?
Well, I think that the most successful financial planning professionals always take that holistic view and contextualize all of the products that they're using to help someone plan for retirement in the way that they ought to. And it is not a replacement for IRAs or 401ks. IRAs and 401ks are foundation to retirement planning. We think about life insurance as providing the death benefit to offset that type of expense or that type of cost or that type of risk mitigation. But what we also should be doing is think about it as a cash accumulation tool, which I've talked about, in the context of the overall holistic plan.
In your article, one of the best parts for me and this opportunity on Off the Page to kind of go a little further on the retirement climb, maybe you can take us through that and how that works as well.
I come back to holistic planning. So if we think about our journey in our financial lives, right? We're climbing, say, up a hill or a mountain, and we are accumulating wealth as we go, right? What about if up the climb, if I'm climbing up that mountain, something happens to me? How is my spouse going to continue the climb and not have the financial shock of that loss of a paycheck for years and years and years? How is she going to allocate her money towards retirement and grow that money so that when she reaches the top of the mountain, she has enough to retire on? Now, what about the way down the mountain, right? Now, here's where we need a decumulation plan to manage the different assets that we're pulling money from so it's managed tax efficiently. We're netting out as much as possible in pocket to spend on the different types of things we want to do. So when we're thinking about that decumulation plan, a lot of times we think about taking money out of bank accounts, stocks, bonds, mutual funds, annuities. Annuities play a big role here. IRAs, 401ks. How about the life insurance? That's what I'm talking about with the power of the life insurance, the versatility of the life insurance, the flexibility of the life insurance in planning. It's not just for death benefit. It's for so many other things.
Thank you very much for being with us. I hope we get to see you again very soon.
Thanks so much, Chuck. Have a great day.
You can find Brett's article on page 12 of the July-August issue of Aspire magazine.